everyone, Jeremy from Trading Safely, just doing an update on global markets. We'll cover metals, index futures, currencies and commodities. Next week Sean will be on, he'll be doing stocks and other general sector analysis, which is always really interesting. So for anyone new, check out www.tradingsafely.com.au. Now I like to analyse each market from two perspectives. One is using our range relativity study, which is the one that you can see here now. So we've got these two yellow lines, they're our weekly bullish and bearish levels. And then we've got our monthly lines here. That's our bullish, there's our bearish. And then we've got the quarterly and brown, bullish, bearish, so on and so forth. So gold's been making a range for a lot of this year around the upper yearly bullish level. So it'd be interesting to see if we can manage to close above that at the end to suggest that gold's going higher. In the short term, however, we've got this relationship here. You can see these brown dots. Now they appear when the quarterly bullish pivot moves outside the yearly bullish, and that can often create moves lower, especially where we're getting this suggestion here, like gold can't even get up near the pivot to suggest that it's actually going higher. So for me, gold at the moment, just when I look at these range deviation pivots, there's definitely a suggestion that gold could move lower, particularly in light of the fact that we've got this time-based sell signal there at the moment. So look, for this week, the bearish pivots at 1246.5 and 1269.5 on the upside. And when we come to our closing study, we'll also see that there's several levels all around the 1269 area. So if we come back to a weekly chart of gold now, we can see here this pink line, that's 1269, and then we've got this falling weekly resistance at 1269.5, and back here we had our weekly level at 1269.4. So there's three time frames all stacking up there. What's interesting about gold is we've got this rising monthly support here at 1241.4. So that's going to become the focus for this month. Gold needs to stay above 1241.4 in August to maintain this rising support. Longer term, I do like gold. We've sort of mentioned this before, but we've got this long-term rising support level. As long as gold can hold 1,046 on a closing basis at the end of the year, then the outlook longer term for gold's pretty good. What we would like to see, or what I'd like to see, is typically to get decent moves higher, you need to see violent moves down. So I'd like to see gold do this and then do this. Look, one step at a time. You can never tell a market what to do. But when I look across the time frames, I've got this rising yearly level, I've got this rising quarterly level, and I've got this rising monthly level. So there is support building, but at the same time, when I look from the top side, I've got falling monthly resistance. So it's important that gold does hold this 1241.4 for the bulls. And like I said, for me personally, I don't think we've seen the low in the gold yet, because typically for a market to move a lot higher, it needs to put in a spike low to create the energy for the upside. So I think the levels that we're watching here, 1241.4 and then 1269 to the upside. So if we can break out of those, then I think you've got your answer. In the shorter term, you've also got weekly support down at 1211.9, and then there's a raft of levels between 1180 and 1199 in gold. So moving on to silver. Bit of a similar story there, although it had an outside reversal to the downside. It was a bit more dramatic than gold. But let's take a quick look at the silver market. So if I come back to our range relativity study, there's last week's outside reversal. Interesting to note that we got we've actually got two sell signals in there. We got a time-based sell signal, similar to this one that happened up here. So that's been acting as a weight on the market, and now right now we're actually coming into this monthly bearish pivot, so that will act as a degree of support. And then we've also got this weekly bearish pivot at 1593. Now that's in what we call a slingshot mode. So the reason there's white dots there is because the yellow level has moved underneath the monthly level, so the week's moved under the month. And you can see in other instances of those white dots exactly what happens. Usually you get a corresponding rally. So silver is starting to come into a bit of support. There was a quarterly slingshot mode up here that you can see, and we got a pretty decent reaction down. So right now the major supports for silver are right here at 16. What's that level there? 1596. So that's a dual monthly and quarterly level that's rising. So it's pretty critical that we hold this level at the end of the month. In the short term, we've got falling weekly resistance, so that's adding downward pressure. All in all, we're trading under last year's midpoint. That's that orange level there, and we've got last month's midpoint there acting as support at 1601. So quite a strong support zone here from 16 to 1610, and then you've got weekly support under that at 1548. No immediate signals in the weekly time frame to act on, and there's been a daily sell signal on silver for a few days now. Obviously, there's some initial target, profit-taking target here at support at 1596. Copper's probably worth mentioning. Copper's been breaking out. Did a lot of work around the monthly closing resistance and has taken that out, and now there's a big wedge of resistance that copper needs to get through before it moves higher. So we'll just show you what's going on there. So here's the raft of resistance that I'm talking about. A few things to note with copper. One here, that's a rising yearly support, so that's projecting copper to have a long-term bullish bias as long as it holds onto this 21.35 at the end of the year. So long-term outlook for copper is actually strong on that basis. But here's the trick: we've got this raft of resistance right there. It starts at 292.75 and it goes right through to 304, and only then is there a gap open up to 33990, and that is the equal and opposite quarterly level here. You can see where this brown quarterly line dropped under price, and what markets do is they go and find the equal and opposite level, which is all the way up here. So assuming copper gets through this raft of resistance, then there's this quarterly level waiting up here at 3399. When we look at it from a pivot perspective, we had a bullish close last month. We closed above this pink bullish level, and so that does suggest that copper's going higher from a pivot perspective. And you've got this resistance zone in here, sort of 300 to 309. So the yearly target's up there at 306. Interesting to note, we are starting to come into an overbought scenario. So just need to keep an eye on that. Perhaps we get a spike high on copper that coincides with a high at this annual target. Just need to wait and see. There's certainly some indication here. We've got this monthly overbought, so the monthly slingshot. So this pink bullish level is now above the quarterly bullish. When that happens, we need to see it continually start taking out these weekly bullish levels. Otherwise, it can reverse down. So copper is at resistance, and it is overbought from this level. So watching, I guess, on that basis, watching for signs of reversal. But to me, this monthly close last month is probably challenging. I think copper's possibly going a bit higher longer term. Next, we might have a look at let's have a look at the indexes. So we've got the S&P 500 futures. Absolutely no reason to be short equities anywhere at the moment, particularly in the US, I should say. So there's been no resistance created at the weekly level or the monthly level or the quarterly level. You can see there's our two monthly levels down there, the pink ones down at 2174 and our quarterly level down at 2057. Now, what you really need to see for a decent market peak is one of these higher time frame levels to actually move up above price and create some resistance. But so far that hasn't happened, and that's typically what happens in a market that's breaking out. Even at the weekly level here, we still haven't seen that move above price. So it's important that you don't stand in front of the truck when a market's rallying. Look at the targets to the upside for the moment. On this week, you've got 2484 above and 2459 below, and then the levels are 2497 above, 2518 and 2539. They're your targets for the S&P. Looking at the Dow is actually had a closed somewhat more bullish than the S&P 500 last month. It took out the monthly pivot on a closing basis. It's the same. Its supports are a long way away, and the market is still moving higher. There's an awful lot of talk of selling it. To me, we've had no reason to be selling the Dow. I mean, the last time we even contemplated it was back here at 18,350, and since then this monthly line has just remained underneath, and so selling at the moment is not recommended from where we sit. Looking at the range deviation pivots, we've now hit our quarterly target at 22,047. The next stop this week is 2,200, and then 22,428 above. That's a double level there, semi-annual and monthly. So that'll be a nice target for the Dow to meet. We are coming into an area of concern in time, however, so we'll just need to monitor that. We're starting to reach quite a high level in this time indicator, but that is corresponding with this monthly overbought. So there's a couple of signs just got to pay attention this week with the Dow, but like I said before, these long-term levels down here, they're the ones that are going to tell you when there's something big on the cards. In the short term, we'd like to see this weekly support here at 21349 move up above price to create some sort of high, much as it did right there. But until then, just stay well clear of being short. So that's the Dow, S&P 500. Back in Australia, All Ords has been range bound for a very long time now. I haven't seen this sort of price action for a long time. More broadly, however, the broader trend remains up with the Aussie market. It needs to get above that sort of 5876 area on a closing basis, and below, here's the major level to watch here, 53.44. But until then, the broader trend remains up, and we'd certainly like to see Aussie market closing above last year's high to maintain that upward momentum. So in the short term, you've got this 5903 level above. It is a rising resistance, so that's very different to a falling resistance. And the key level at the end of the year is on the downside is 53.44. You can see this really big congestion period over the last 2 months. It's very unusual. I'm just going to compress this to have a look at the pivots to see if they're telling us anything. All that's telling us is that the market is in equilibrium at the moment. All the time frames are stacked inside each other. There's no additional information there at the moment. In fact, the last monthly close we had was bullish. And if I look at each of the bearish monthly pivots since then, we've never actually closed below it at the end of the month. So this bullish trend from up here at 58.87 is actually still in play. And certainly at the end of last year, you can see right there we closed above that yearly bullish pivot in orange. So we've got a yearly bullish bias and a monthly bullish bias. No reason really to be getting out of Aussie equities at the moment on that basis. Might jump over to some of the other commodities now. A lot of the grains had a breakout from consolidation zone into annual resistance, but now they're retesting support. But what's what's important to note, I guess, with quite a few of these grain markets is that we're working through all the different levels in time. And uh, when I look at this wheat chart here, what's interesting to note is that the market highs was at this orange yearly line. Now, given that this quarterly line's dropped under price, acting as support, and given that this semi-annual line's dropped under price, acting as support, that only leaves the annual time frame left. Now, once that drops under support, it opens up this big gap up to there. So I think what we're seeing here is that we're seeing a basing in a lot of the commodities, and at least that's true while we maintain this zone here, 4086 to 4020. In the short term, however, we've seen this monthly level move over price at 5110, and it opens up the equal and opposite monthly level down there at 4184. So there's a deep support for grains down here, and if that holds longer term, it's quite likely that we're putting in a big base for wheat. From a midpoint perspective, when we look at this study, if I follow that yearly level down, we've just crossed over it for the first time, and now we're back testing what is a rising quarterly support and a rising monthly support. So this is just consolidating and back testing support for me at the moment. I'll be interested to see buy signals out of this area down here. So watching that one with interest. From a pivot perspective, interesting to note at the high that we got the quarterly slingshot mode, and that was responsible for this move down. Equally, however, now we've got a monthly slingshot mode from below, which is often associated with moves higher, as long as we close above this monthly pivot at the end of the month. So that's some additional suggestion that we might be basing in the grains, well, in wheat again. Corn's slightly different to wheat. It's also been trapped in the recent range, tried to break out with some weather, and is now consolidating, but still very much in deep support. But I think the structure of corn is slightly different to that of wheat. Just bear with me while that program calculates. But if I look at corn, okay, so looking at corn is different to wheat because you'll notice this annual level is below with corn, whereas in wheat it was above. So corn's actually already above support to some degree. So I think what we'd like to see with corn is it needs to take out the nearby resistance, and that's that weekly level there at 38.16. What's positive about corn is you've got rising quarterly support, you've rising semi-annual support, and you've got this huge deep congestion zone. So once again, when I look at these midpoints below, I've got a rising semi-annual midpoint, a rising quarterly midpoint. Just needs to get this resistance from above. Obviously, all bets are off if we manage to close under 33.62. I'll have a look at soybeans. Then we'll take a quick look at sugar and oil, which have been sort of pretty interesting, particularly sugar. Let's have a look at beans. Beans was making a range around last year's close just recently. It's got a bit of a bullish scenario building as well. If I look right down here, we've got this rising yearly level. Okay, so long term, you've got rising yearly support for soybeans. So that bodes well for the future of soybeans as long as it can close above 8710 at the end of the year. More recently, if we zoom in now, those little white dashes there, that's last year's close. We made a distribution around that, and we stopped up there right at the monthly closing resistance, and now we're just back testing the equal and opposite level at 9160. So looking for buy signals out of here again, basis this rising yearly support. So longer term looks pretty good for beans. When I look at this range deviation pivot chart, here's our quarterly slingshot from below that created this energy to the upside. More recently, we've had that monthly slingshot from above pushing the market down, and we're now coming into support. So looking for buy signals on beans. Sugar's sugar put in a retest of yearly resistance. It's just bounced off it and is now consolidating. We like sugar longer term. Sugar is in a very rare double slingshot mode. That happens where you get the quarterly pivots and the semi-annual pivots both move outside of the yearly pivots, and that can create some enormous energy to the upside. So I'm watching sugar very closely. We did enter this trade a bit earlier and we got out, but definitely took some profit, but definitely looking to get back in. What can we say about sugar? Well, there's a few things right here. That's that little pink line there stepping up. That's rising monthly closing support. So that's quite powerful. Even here, we've got rising yearly support. But what we'd like to see is let's get back over this orange line on a closing basis. Really like to be above this 1507 on a monthly closing basis to open up this gap here with sugar. From a range deviation perspective, I'm going to show you what I mean by that rare setup. Okay, so here's our bullish yearly pivot up there, and here's the bearish pivot. Now, you don't see this often at all, but if you have a look at that semi-annual pivot and that quarterly pivot, you can see how all of them are outside. Okay, so the last time that happened was quite some time ago, but it's very, very rare. But when it happens, it can give really, really big moves up. So I'm just going to try and find that for you. I don't want to waste too much time though. See if I can find it. Just shrink this market right up a bit. Okay, let's see. Okay, here it is here. Alright, so there was the yearly bullish pivot. Here's the yearly bearish. And now look here. I've got the semi-annual, the quarterly, semi-annual and the quarterly are all underneath the yearly pivot. And you can see what happens next. We've got this ginormous move up here. So watching for a repeat, we've got the same setup at the moment today, right now. So watching sugar to get back basically above this zone here, that low there. If we can close above there, then sugar can absolutely rip. So stay tuned with sugar. Oil, let's take a look. Oil reached our weekly target of 50.53 last week. That was the closing weekly rotation point. And at the moment, let's just take a quick look, but I think it's consolidating. It may have a slight overbought scenario on the pivots. So, okay, that was the rotational low, and the market went straight back to the opposite one there. That was the target, 50.53. And now what's interesting is we've got this rising monthly support. That's now making 46.33 a critical level to watch for at the end of the month. In the bigger picture, it really is decision time for oil in some respects. It is compressing. We've got this falling quarterly resistance and falling semi-annual. So this is a major level now, 53.89. That corresponds with last year's close. At the same time, we've got this yearly support here under price, and we've got rising monthly. So it's telling you that oil is going to compress over the next little bit. But should oil manage to break out over 54, then it's opening up quite a bit higher. I mean, you've got that old high there at 55 and a quarter, but then you're talking about moving through the 60s. Equally, on the downside, if oil was to fail here and take out that 46.33 on a monthly closing basis, then you're really looking back down to 43.76 to 43.17. From a midpoint perspective across time, you can see there this orange level, that's the yearly. You can see how it was above price for a long time, well now it's underneath it acting as support, so telling you that longer term support is forming for oil. Now, might go to currencies. It's been a wild ride there for the last little bit. The euro has been tracking high for quite some time. There's been no reason to sell it for about 5 or 6 cents now, nor has there been any continuation buy signals. The bigger picture for the euro is clearly down, but it may end up going all the way up to 129 before it goes down and makes new lows. For us, this was the major event, identifying the low when we had this quarterly support form and then the semi-annual support. So we've met our quarterly target at 114, and now just last week we hit our yearly resistance there. It's not over for the euro. You can see these yellow lines just there. They're the weekly lines and the monthly lines. Until those levels pop up over price, you just got to stand out of the way. This can continue to go higher. If I look at the range deviation pivots, actually we met our semi-annual target, and above right now you've got 120.638, and that is, when we look at it from a time perspective, it is in a slingshot mode. So should we start failing to take out these weekly bullish pivots at 118692 on a weekly closing basis, then it may be that the euro's tiring. But certainly from a closing perspective, this is saying definitely not a sell just yet. The dollar index is the same. It's just the inverse of that. It's had a decent sell-off. It's hit a decent support. However, what was really interesting to me at the end of last week, the dollar index did not close above the weekly bullish pivot, and therefore remains suspect as to the validity of that so-called bounce. So not convinced with the dollar index that we have found a low, although we did hit a major support and we got a good reaction off it. So just need to watch that dollar a little bit longer. For me, there's the major support that we bounced off. We are trying to create weekly support here. That is a potentially bullish development, so you need to keep an eye on that closing level this week, which is 93. What's that level there? 93290. Need to watch that level. If this sort of support zone gives way, then we've got 89.71 underneath. Bigger picture, we still think that the dollar index is going up. You've got this yearly support all the way down here that hasn't moved above price, which leaves a move back to the upside well and truly open whenever this corrective move finishes. So here's the pivots that I was talking about. Actually, I'm just going to, you can see last week we didn't close above that weekly bullish. So normally when markets reverse, they do actually close above the upper bullish pivot. So need to watch that one. Support this week at the weekly levels 92875. If that gives way on the Friday, then it's telling you it's not as strong as you think. On the downside, pivot supports are here at 91929 and 91550. So pretty keen to watch that. A lot of the dollar index pairs to me feel like they're in a corrective mode for going higher again. If we have a look at the Aussie hit a major resistance level at 8049 on the futures. Is now sort of retesting support. Just bear with me for a second, we'll see what's happening with the Aussie. Sorry folks, looks like I just typed code into the wrong chart. Okay, there's the major resistance that stopped the Aussie dead in its tracks. You can see down here we've had rising quarterly support, and then also we had this quarterly resistance drop down, and we took that out on a quarterly closing basis. That's propelled the market higher. In the short term this week, we are actually trying to build a weekly closing resistance. So 79.81 becomes the focus this week. If we manage to close under that, then we do have a temporary high in place, and it may be that we come back and test support at 78.18 or 76.54. Longer term, there's no reason that the Aussie can't make new lows, because the yearly support under here is actually falling as opposed to rising. That leaves the potential for a move lower, well and truly open after this corrective move. So looks like short-term test of support, but the focus is 79.81 at the end of the week to see if that actually can hold. We can retest support. From a pivot perspective, there's some levels above there, 8030 and 8141, and this is probably responsible for this move down at the moment. This slingshot mode from above. You can see the slingshot mode from below there that caused this move up. Now this is obviously causing some sort of pullback. And what else is there? The pound. I think a lot of the US dollar pairs are the same. They're trying to build reversals, but until the end of the week it remains suspect. So I'm not convinced that the dollar index has finished its downward trend, and I say that because we couldn't close above the weekly bullish pivot last week. And trying to build resistance once again at 13166, major level above at 13492. Only a monthly close over that opens up to the 142 zone. When we look at our midpoint study across time down the bottom, we're still well and truly below resistance here on a long-term basis. So it would take quite a few. You'd have to get back above 135 to get interested in the pound longer term. So resistance at the moment 13166 and support 12743. What other markets are there? Finally have a quick look at the US dollar yen. Very choppy, not a great market to be trading. You've got a lot of the higher time frames compressing, making yen and to a similar extent gold quite choppy. Big picture, it's what's it telling you? Well, to me, it's telling me it's got rising semi-annual support, but it's becoming very congested in the short term. We've got rising long-term support on the one hand, but then falling monthly. So it does feel like it's compressing. Really, the key for yen is this, closing the week under one of these weekly supports, which currently resides at, well, this week it's 110.692, and to the upside you've got this monthly level at 112.389 that's now acting as a weight, trying to push yen down. So equally, if yen's going to try and have an attack back at the upside based off this rising quarterly support, then it needs to take out 112.389, which is quite a strong level there because it's a monthly level. So these aren't great markets to trade the yen, because you're like trapped right in the middle of the distribution, so it's just going to be choppy like this. So you should expect it to be a bit like a washing machine. So from a pivot perspective, we've got this monthly slingshot building, which will give a tendency for the market to, do what it did here and just push up a little bit. But there are other forces at work now, like this monthly falling resistance trying to push it down. So it's all saying stay well clear of yen until it can give you a clearer direction. So might just have a quick look at 30-year bonds. The broader trend in bonds is down. It, like the yen and like a lot of other markets, is compressing in time, and at some stage will provide a violent breakout, and from there you'll get a clearer picture. But in my mind, the high in the US bonds is in place, and now we're looking at testing support, and really, should we break, I think, this 150 to 147 zone, this is the big zone for bonds. Under there, it just becomes a bit of a car crash all the way down to 128. So, look, we are still above this key yearly support, but if that was to give way, 147, then yeah, big trouble. So, as of the short term and today, there's a few things going on. We've got this falling pink monthly line acting as resistance. We bounced off there last week. That's at 155. Now you've got this falling weekly resistance at 154.2, and you've got supports here at 153.1 and 151.250. So we like to sell against levels where they're falling. So when you get falling monthlies and falling weeklies, then you want to sell against those. And similarly, where you get rising levels, you want to buy against those, particularly if you get a buy signal. So look, I think that's it for this week. Good luck with the trading this week, and look forward to chatting to you next week. And don't forget to check out our subscriptions page on www.tradingsafely.com.au. Thanks, bye.